The global semiconductor industry is entering a historic growth phase driven by artificial intelligence, advanced computing, and next-generation energy technologies. Analysts now project that total semiconductor revenues could approach or even surpass $1 trillion annually within the next decade. But while most investors are chasing mega-cap chip stocks trading at extreme valuations, some of the most interesting developments are happening far below Wall Street's radar. In today's video, I'm covering a tiny semiconductor materials company that just signed an agreement with a global electronics powerhouse and simultaneously expanded into advanced nuclear reactor materials, a sector positioned for explosive long-term growth. The crazy part? The stock is trading near its 52-week low with a market cap of just around $4 million. Almost nobody is paying attention. Before we jump in, if you find value in deep dive research like this, hit the like button and subscribe so you don't miss future opportunities. It takes 2 seconds and massively helps the channel grow. I'm aiming for 500 likes on this video. Let's see if we can hit that goal. And as always, I'm not a financial advisor. This is not financial advice. Make sure you do your own research before investing. Now, let's break this down. The company we're talking about operates in the semiconductor materials space, the foundational layer of modern electronics. Instead of producing chips themselves, they develop next-generation semiconductor compounds designed to dramatically improve performance, flexibility, and energy efficiency across displays, sensors, and advanced electronics. Their core technology centers around proprietary organic semiconductor materials that enable ultra-thin, flexible, and low-power transistors using low-temperature manufacturing processes. This is important because it allows their materials to integrate directly into existing production lines without expensive factory rebuilds. In practical terms, this opens the door for next-generation display technologies like micro-LED, mini-LED, AMOLED, and flexible smart surfaces, all areas experiencing massive investment right now. Their long-term vision is to become a leading supplier of semiconductor materials powering lightweight, unbreakable, energy-efficient electronics across consumer devices, wearables, sensors, and AI hardware. The company operates research and development facilities in the UK and works closely with manufacturing innovation centers to prototype commercial applications of its technology. One thing I always look for in early-stage tech companies is intellectual property. And this company checks that box in a big way. They hold more than 130 granted patents across multiple technology families, giving them strong protection in advanced semiconductor materials and manufacturing processes. That matters because in materials science, IP is often the biggest competitive moat. Now let's talk about where the market is heading. Display technology has evolved rapidly from CRT screens to LCD, then OLED, and now toward micro-LED, which is widely considered the future of high-performance displays. Micro-LED offers higher brightness, better color accuracy, longer lifespan, and lower power consumption than current technologies. It's expected to power everything from smartphones and TVs to augmented reality glasses and next-gen wearables. Industry forecasts estimate micro-LED alone could become a multi-billion-dollar market by the end of the decade. But that's only part of the story. Adjacent semiconductor packaging and AI hardware materials markets are projected to reach tens of billions of dollars as computing demands explode. In other words, the addressable market here is enormous. What really makes this story interesting is the recent developments. Just weeks ago, the company announced a paid proof-of-concept partnership with a global consumer electronics leader to develop next-generation smart wearable displays using its semiconductor materials. This isn't just lab testing, it's product-level development aimed at real commercial devices. The wearable technology market is already approaching $100 billion annually and is expected to nearly double over the next several years as smart health devices, AR glasses, and connected tech become mainstream. On top of that, the company recently demonstrated a breakthrough organic transistor biometric sensor capable of outperforming conventional inorganic sensors, opening the door to advanced medical, optical, and AI sensing applications. But here's where things get really unexpected. The company just expanded its materials platform into nuclear energy. Through a new strategic acquisition agreement, they're entering the production of nuclear-grade graphite, a critical material required for next-generation advanced nuclear reactors. Why does this matter? Because nuclear power is rapidly re-emerging as a cornerstone of global energy infrastructure. Artificial intelligence, cloud computing, and data centers are creating massive electricity demand that renewable energy alone cannot meet reliably. Major tech companies like Microsoft and Google are already investing heavily in nuclear power to secure long-term clean energy supply. Governments are also pushing aggressively to expand nuclear capacity over the coming decades, and nuclear-grade graphite is one of the essential materials required for these advanced reactor designs. Currently, much of the supply is controlled overseas, creating major national security and supply chain risks. This company's move aims to establish a domestic controlled supply chain for this critical nuclear material. That positions them directly inside one of the most important energy transitions of the next 30 years. So now we have a semiconductor materials company operating across next-gen display technology, wearable electronics, advanced sensors, AI hardware materials, and nuclear energy infrastructure. That's an incredibly rare combination for a microcap stock. Let's talk about the stock itself. The share price is currently sitting near its 52-week low, yet just last year it surged multiple times higher following strategic partnership announcements. Recent weakness came from a stalled prior agreement, which has now been replaced by a far more strategically important nuclear materials expansion. Despite all this progress, the company's market cap remains around $4 million. To put that in perspective, many pre-revenue tech startups trade at valuations 50 to 100 times larger with less real-world traction. Management is another strong point. The leadership team includes executives who have previously scaled technology companies from small caps into multi-billion-dollar enterprises, with experience across public markets, materials science, and commercialization. That's exactly what you want in an early-stage deep tech company. Now, of course, this is a speculative investment. Early-stage technology companies always carry risk. Commercial adoption takes time. Partnerships must convert into revenue. New materials must scale. But the upside potential here is asymmetric. You're getting exposure to massive future markets at a valuation most investors would never believe possible if even a fraction of these technologies succeed. So the big question is this a forgotten microcap sitting at the intersection of semiconductors, AI, and nuclear energy, just as all three sectors enter historic growth cycles? Or is it another early-stage company that will take longer to break out? That's what makes stories like this fascinating. As always, I'm not a financial advisor, and this is not financial advice. Make sure you do your own research before investing. Let me know what you think in the comments. Do you believe advanced semiconductor materials and nuclear energy are the next massive growth frontiers? And if you enjoyed this deep dive, don't forget to like and subscribe. I'll see you in the next video.